There is a specific quiet moment in every trader's journey that remains largely undiscussed in the flashy world of social media and get-rich-quick advertisements. It is an invisible threshold. Most people assume the transition to professional trading is marked by a sudden explosion of wealth, a Lamborghini moment where a single trade changes your life forever. But reality is much more subtle. The shift happens so quietly you almost miss it. It isn't the day your account balance doubles, and it certainly isn't when you finally hit that winning streak you've been chasing for months. It is something much smaller, much more internal. When it happens, you feel a fundamental change in your DNA as a market participant. You realize that you are no longer the person who started this journey. Becoming a profitable trader isn't about one big breakthrough. It's about a series of small internal shifts that compound over time. These are shifts in how you think, how you react, and ultimately, how you see the world of probability. If you're experiencing even one of these signs, you are closer than you think, even if your brokerage account doesn't show it yet. This is because the internal work must be completed before the external rewards can manifest. The great misconception of success. Most traders look for proof of success in the wrong places. They look at their P&L statement, they count their winning trades, they compare their equity curve to someone else's curated feed. By doing this, they miss the real signals, the psychological indicators that appear long before the money does. If you are currently in a drawdown or a plateau where your account isn't moving, you might feel like you're failing. But if your internal world is shifting toward the 5 signs we are discussing, you aren't failing, you are leveling up. Think of it like a skyscraper. For months, all the work is done underground, digging a deep foundation. To an observer, nothing is happening, but without that deep, invisible work, the building would eventually collapse under its own weight. Becoming profitable is a process of stripping away the ego and the desire for excitement until all that remains is the cold, hard execution of an edge. To reach this, you must pass through the first and perhaps most difficult gate, the gate of boredom. Sign number 1. The mastery of boredom. The first and perhaps most jarring sign that you are becoming a professional is that you are consistently and deeply bored. I don't mean the kind of boredom where you have nothing to do. I mean a clinical, detached boredom with your actual trading process. You sit in front of the screen, your setup appears, you click the button, and you feel nothing. No adrenaline, no fear, no thrill, no rush, just the routine execution of a task, similar to how an office worker might file a report or a carpenter might hammer a nail. Why boredom is a superpower. In the beginning, trading is an emotional roller coaster. Beginners are addicted to the event. Every trade feels like a high-stakes movie scene. Their heart races, their palms sweat, and they refresh their position every few seconds, watching the decimals move. This excitement feels like engagement. It feels like they're in the game. But in the professional world, excitement is a massive red flag. Excitement is the byproduct of uncertainty. If you're excited, it means you don't actually know what's going to happen, or you've likely risked more than you are comfortable losing. When emotions are involved, your prefrontal cortex, the part of the brain responsible for logical decision-making, shuts down, and your amygdala, the fight or flight center, takes over. Profitable traders are bored because they have achieved unconscious competence. They have seen their specific setup so many times that it has lost its novelty. There is no surprise left. They know exactly what the market is likely to do, and more importantly, they know exactly what they will do if the market doesn't follow the script. This familiarity breeds a sense of calm that looks like boredom to an outsider, but is actually a state of peak performance. The surgeon analogy. Think about a world-class surgeon. When they step into the operating room to perform their 1,000th routine surgery, they aren't looking for excitement. They aren't hoping for a thrill. They want the most boring, predictable experience possible.
They want to execute a procedure they have mastered with zero surprises. The outcome doesn't emotionally affect them because they trust their training and their process. That is what profitable trading looks like. If you are still seeking dopamine from the markets, you are still a beginner. If the routine of your trading life is making you feel like you're working a boring 9 to 5, you are finally on the right path. The market rewards those who treat it like a boring business and punishes those who treat it like a casino. The dopamine trap. The hardest part about this first sign is that most of us got into trading for the opposite of boredom. We wanted freedom, we wanted fast-paced action, and we wanted to escape the monotony of a regular job. When the boredom finally sets in, it can feel like a crisis. You might feel like you've lost your passion. You might even find the money you make feels insufficient at first because the high you used to get from a winning trade is gone. This is where many traders fail. They get bored with their winning, boring strategy and start tinkering with it just to feel something again. They add new indicators, they increase their leverage, or they take gambling trades just to get that dopamine hit back. You must resist this urge to spice things up. You must internalize that the path to your real goals, financial freedom, time with family, a changed life, is paved with boredom. Don't forget that the path that aligns with your real goal is the boring one, not the exciting one. Practical application. Embracing the routine. How do you know if you are mastering this sign? Ask yourself these questions. Do I feel a physical reaction, heart racing, sweat when I enter a trade? If yes, you are still in the excitement phase. Do I feel the need to tell people about my big win? If yes, you are still seeking validation through excitement. Does the process of waiting for a setup feel like a chore? If yes, you are approaching the professional stage. When you reach the stage where you'd rather go for a walk or read a book than stare at a running trade, you have won the first battle. You have separated your self-worth and your emotional state from the movement of the candles. You are no longer trading for the thrill, you are trading for the result. This detachment is the foundation upon which all other profitable habits are built.
The second sign that you are transitioning into a professional trader is a radical shift in your daily focus. This is the moment you stop checking your account balance during the day. For most beginners, this sounds counterintuitive or even impossible. They think, how can I be a professional if I don't know exactly where my money is at every second? But the truth is exactly the opposite. The more you focus on the money, the less likely you are to actually keep it. This stage is about moving from an outcome-oriented mindset to a process-oriented one. It is the realization that while you cannot control what the market does, you have 100% control over what you do. When you finally stop refreshing your brokerage app or staring at the floating P&L, you are signaling to yourself that you trust your system more than your emotions. The obsession with results. Beginner traders are obsessed with results. Their entire identity is tied to the dollar amount on the screen. If they are up $500 for the day, they feel like geniuses, walking with a sense of unearned confidence. If they are down $500, they feel like failures, often slipping into a dark mood that affects their personal lives and their families. Because their self-worth is tethered to the account balance, they check it constantly. They refresh their position every few minutes. They do the mental math. If price hits this level, I can pay off my credit card. If it hits that level, I can buy that new watch. This is a trap. Every time you check your P&L, you are reinforcing the wrong focus. You are training your brain to react to the money rather than the market. When you watch the numbers fluctuate, your brain experiences a series of micro shocks. A tick in your favor gives you a tiny hit of dopamine. A tick against you gives you a tiny hit of cortisol. By the end of the day, you are mentally and emotionally exhausted, not because the market was difficult, but because you spent 8 hours on a psychological roller coaster. This exhaustion leads to decision fatigue, which is why many traders make their biggest mistakes, like moving a stop loss or closing a winner too early, right at the end of the session. The professional focus is execution only.
When you are finally becoming profitable, you stop caring about the specific number during the trading day. You stop the mental math. You stop refreshing. Why? Because you've shifted your definition of a good day. For a professional, a good day isn't necessarily a green day. A good day is a day where you followed your plan perfectly. Did I wait for my A-plus setup? Did I enter with the correct position size? Did I keep my stop loss where it belonged? Did I walk away when the market became choppy? If the answer to those questions is yes, the day was a success, even if the account balance ended lower than it started. The professional understands that the account balance is a lagging indicator. It is the result of thousands of correct decisions made over time. If you focus on the decisions, the process, the balance takes care of itself. If you focus on the balance, your decisions will be sabotaged by fear and greed. The trap of validation. Many traders check their balance because they are looking for validation. They want the market to tell them they are right. But the market doesn't care if you are right. The market is just a massive machine of liquidity and probability. When you stop checking your balance, something interesting happens. Your trading immediately improves. You are no longer making decisions based on whether you are up or down for the day. You stop revenge trading to get back to break even, and you stop scared trading to protect a small profit. You start making decisions based solely on what the market is showing you. You are executing a system, not defending an ego. Of course, this doesn't mean you ignore your risk. If your system requires you to trail a stop loss or manage an active position, you do so. But there is a massive difference between monitoring a position according to a plan and obsessing over a position out of fear. One is a professional task, the other is a psychological burden. Putting distance between you and the trade. To reach this stage, you must learn to put distance between yourself and the position. I often tell people to set it and forget it as much as your strategy allows. If your stop loss and take profit are set, there is nothing left for you to do but wait. Any further interaction with the trade is usually an attempt by your ego to interfere with the probability you've already set in motion. The emotions you generate before a position closes can sabotage not just that trade, but your future trades as well. If you get too attached to a winner, you might become overconfident and over-leverage the next one. If you get too angry at a loser, you might skip the next perfectly valid setup out of fear. By refusing to check the balance, you keep your emotional slate clean. Practical application. Breaking the habit. How do you implement this? It starts with small, deliberate steps. Hide the P&L column. Most trading platforms allow you to hide the dollar amount of your open positions. Do it. Focus on the chart, the pips, or the percentages, but hide the currency. Scheduled check-ins. Decide that you will only check your total account balance once at the end of the week or the end of the month. Journal the process, not the profit. In your trading journal, don't just write down how much you made, write down your execution score. Grade yourself on how well you followed your rules. When you reach the point where you close your laptop at the end of the session and you honestly don't know the exact dollar amount of your account and you don't care, you have mastered sign number 2. You are no longer a slave to the scorecard. You are a master of the game. This shift is massive. It means you've stopped trading for validation and started trading for a living. You've accepted that the money is just a side effect of a job well done.
The third sign that you are crossing the threshold into profitability is perhaps the most counterintuitive to those outside the industry. You start skipping more trades than you take. In almost every other profession, more activity is equated with more productivity. If a carpenter hammers more nails, they build more houses. If a writer produces more words, they finish more books. But in trading, the relationship between activity and results is often inverse. Taking too many trades is one of the primary reasons traders fail. It leads to mental exhaustion, increased commission costs, and most importantly, a higher probability of error.
When you finally become a professional, you don't look for reasons to enter the market, you look for reasons to stay out. The illusion of working hard. Most beginner traders suffer from a work ethic bias. They feel that if they aren't clicking buttons, they aren't working. They sit in front of the charts for 8 hours, and if they don't take a trade, they feel like the day was wasted. This desperation to be productive leads them to lower their standards. They start seeing setups that aren't actually there. They see a kind of breakout or a partial candlestick pattern and convince themselves it's good enough. They manufacture opportunities out of boredom or a need to feel valuable. This is the shotgun approach, firing at everything that moves in the hopes of hitting a winner. However, the market is a predator that feeds on unnecessary activity. Every time you enter a trade, you are exposing your capital to risk. The professional understands that capital preservation is the first priority. Money is your inventory. If you run out of inventory, you're out of business. Therefore, you only deploy that inventory when the odds are overwhelmingly in your favor. The power of the no. When you are becoming profitable, you become ruthlessly selective. You develop a filter that is so fine it catches only the highest quality opportunities. I remember when this shift happened for me. I went from taking 15 trades a week to taking maybe 2 or 3. At first, it felt wrong. It felt like I was being lazy. I would watch price move without me and feel a twinge of FOMO, fear of missing out. But then I looked at my data. I realized that my win rate hadn't actually changed much, but my profitability exploded. Why? Because those 2 or 3 trades were the only ones that actually had an edge. The other 12 trades I used to take were just noise. They were break-evens, small losses, or small wins that were eaten up by commissions and spreads. By cutting out the mediocre trades, I stopped leaking money. Developing pattern recognition. This selectivity is the result of deep pattern recognition. Beginners can't tell the difference between a good setup and a great setup because everything looks like an opportunity to them. But after seeing the same patterns repeat thousands of times, your brain begins to categorize them. The A+ setup, perfect alignment of trend, volume, and price action, high probability. The B setup, looks okay but lacks 1 or 2 confirming factors, break-even probability. The C setup, forced, trading based on a hunch or a weak signal, losing probability. The professional trader is an A+ hunter. They have the discipline to sit on their hands while B and C setups pass them by. They know that good enough is the enemy of great. Passing on a trade is a deliberate, active decision that requires more mental strength than taking one. Quality over quantity. If you find yourself passing on more setups than you take, you are not being lazy, you are being professional. You have realized that the market doesn't pay you for your time, it pays you for your patience. Think of yourself like a high-end sniper, not a machine gunner. You might wait in the bushes for 3 days for a single shot. If you fire too early, you reveal your position and lose the target. If you wait for the perfect moment, you achieve the objective with a single round. This selectivity also protects your mental capital. Trading is exhausting. Every trade requires a series of complex decisions and an emotional toll. By taking fewer trades, you ensure that when the perfect setup finally arrives, you're fresh, alert, and ready to execute without hesitation. You aren't tired out from fighting a dozen mediocre battles that didn't matter. Practical application. How to be ruthless. To master sign number 3, you need to turn your trading plan into a strict checklist of requirements. The wait-and-see rule. If you see a setup, walk away from the computer for 5 minutes. If it still looks perfect when you come back, consider it. Most impulse trades look like garbage after a 5-minute break. The 3 confluence minimum. Never take a trade unless at least 3 independent factors, for example, support level, RSI divergence, and a pin bar candle, align perfectly. Pride in the skip. Start tracking successful skips in your journal. Every time you pass on a mediocre setup that ends up hitting a stop loss, give yourself a mental win. Internalizing that taking fewer trades is the right thing to do is a major milestone. You must move past the feeling of guilt for doing less work. In trading, doing less often results in more. You are no longer running from the job. You are finally doing the job correctly.
The fourth sign that you have reached the professional tier is a fundamental transformation in how you process losing trades. This is perhaps the hardest psychological hurdle to clear because humans are biologically wired to avoid being wrong. In our everyday lives, being wrong often carries social or professional consequences. In trading, however, being wrong is a mathematical certainty. When you reach this stage, losses no longer bother you. And I don't mean you've become numb, careless, or reckless. I mean you have rewired your brain to see a loss as simple data rather than a personal failure. The ego versus the math. For a beginner, a losing trade is a traumatic event. It ruins their day or even their entire week. They feel shame, frustration, and a burning desire for revenge. They begin to question everything, their strategy, their teacher, and their own intelligence. To the amateur, a loss is a signal from the universe that they aren't good enough. The professional trader has killed their ego. They understand that a single trade is statistically insignificant. They know their strategy so deeply, having executed it hundreds or thousands of times, that they understand the distribution of outcomes. If your strategy has a 60% win rate, that means out of 100 trades, 40 must be losers. When a professional hits one of those 40 losses, they don't get angry. They recognize it as a necessary part of the math. You cannot have the 60 winners without paying the tax of the 40 losers. The loss is simply information about what didn't work this time. Nothing more, nothing less. The cost of doing business. Think of a retail store owner. If they buy 100 shirts to sell and 5 of them are damaged in transit, they don't have a mental breakdown. They don't question their ability to run a business. They simply mark it as shrinkage or cost of doing business. It is an expected expense required to generate a profit. A professional trader views losses the same way. The stop loss is simply the cost of seeing if the next trade will be a winner. This shift in perspective removes the emotional weight of the trade. When the emotional weight is gone, so is the stress. You close the losing trade, you journal the data, and you move on to the next setup with the exact same mindset you had before. There is no spiral, no revenge trading, and no need to make it back immediately. Detachment through screen time. This level of maturity cannot be faked. It is the result of screen time. It comes from seeing the same patterns repeat so many times that individual results lose their sting. Emotions in a professional trader are not felt over minutes or hours. They are smoothed out over weeks and months. When you can lose 3 trades in a row and your mood remains as calm as if you had won 3 in a row, you have crossed a threshold most traders never reach. This detachment isn't coldness, it's maturity. It is the realization that you are not the trade and the trade is not you. You are simply the executor of a system. Rewiring the response. This shift is difficult because our egos are wired to protect us. A losing trade feels like the market is saying, "You are wrong." But the market isn't a person. It doesn't know you exist. It is just a flow of orders. By accepting that you have no control over the outcome of a single trade, you give yourself permission to be wrong without being hurt. You give your strategy the time and space it needs to reach the long run where the profits live. This is why maturation is so important. It allows you to survive the losing streaks that cause amateurs to quit or blow up their accounts. Practical application. Testing your detachment. How do you know if you've mastered sign number 4? The sleep test.
Can you take a loss and go to sleep without thinking about it? The next trade test. After a loss, do you feel any hesitation or fear when the next valid setup appears? If you hesitate, you are still emotionally attached. The probability mindset. Do you think in terms of this trade or the next 20 trades? You must give your strategy enough time to reach this stage. The game should become boring and emotionless. This happens by doing the same thing constantly until there is no room for surprise. Everything becomes a matter of probability. When you stop taking losses personally, you finally become unshakable.
The fifth and final sign is the one that confirms everything. You stop looking for new strategies. This is the ultimate indicator of a maturing trader. In the beginning, the journey is defined by a frantic horizontal search. You jump from one YouTube guru to another. You buy 3 different courses. You join 5 Discord signals groups, and you constantly swap your RSI for a MACD, thinking the secret is hidden in the next indicator. But when you finally become a professional, that curiosity for the new completely vanishes. You find your edge, and you realize that your job isn't to find a better one, it's to master the one you have. The death of the Holy Grail myth. Beginner traders are perpetual seekers. They're looking for the Holy Grail, that one perfect strategy with a 90% win rate and 0 drawdown. Because they're looking for a magical solution, they never go deep enough on any single method to actually make it work. At the first sign of a losing streak, they abandon their current system and go back to the search, calling the previous strategy broken. The professional trader knows that there is no such thing as a perfect strategy. Every edge has its season of drawdown. The difference is that the professional has committed. They have chosen one approach, one way of looking at the market, and they have gone so deep that they see nuances that others miss. They aren't watching videos about new approaches because they're too busy studying the intricacies of their own. They've moved from horizontal exploration to vertical mastery. Learning vertically. When you stop looking for new strategies, you don't stop learning, you just change the way you learn. Instead of adding new tools to your belt, you are sharpening the ones you already have. You aren't looking for a new entry signal, you are refining your exit strategy to capture more of the move. You aren't looking for a new time frame, you are studying how your setup behaves in different market conditions, trending versus ranging. You aren't looking for a new asset class, you are optimizing your risk to reward ratios on the pair you already trade fluently. This depth is what creates consistent profitability. You've traded your setup so many times that it's no longer a set of rules, it's a language you speak fluently. New strategies don't look appealing anymore. They look like distractions. They look like a regression back to the surface level, and you've worked too hard to build your edge to abandon it now. The threshold of doubt. Here is the most dangerous part of this journey. These 5 signs, boredom, detachment from P&L, selectivity, emotional neutrality, and commitment, often appear long before the money shows up. You might be doing everything right. You're bored, you're disciplined, you're skipping bad trades, you're handling losses like a pro, and yet your account might still be at break-even or even slightly down. This is the moment where most traders fail. They start to doubt. They think, if I'm doing everything right and I'm still not rich, then the strategy must be wrong. This is the ultimate test. The internal work is done, but the external results haven't caught up yet. If you abandon your process now, you reset everything. You go back to the excitement, the balance checking, and the strategy hopping. You go back to the beginning of the 90% who never make it. But if you endure, if you stay in the boring and trust the signs, the market will eventually align with your consistency. The reward of the professional. I remember when this happened to me. After months of discipline with a flat account, something shifted. It wasn't because I changed my strategy, it was because the market finally rewarded my refusal to change. My account started to grow predictably and steadily. The stress disappeared.
Trading no longer created negative emotions. It became a quiet, professional background to my life. That is the life of a profitable trader. It isn't a high-speed chase, it's a slow, steady build. Your life changes, your stress levels decrease. You become less reactive, not just in trading, but in life. You realize that being profitable is important, but staying profitable is a matter of maintaining these 5 internal signs every single day. Final truths. If you recognize even 1 or 2 of these signs in yourself, take heart. You have already separated yourself from the masses. You are transitioning from amateur to professional, from gambling to trading, from hoping to knowing. Trust the process. The market rewards those who become the kind of person who can handle money long before it actually pays them. Stay in the boring. Stay in the process. Stay in the selectivity. That is where the freedom is found.